Hey, what's going on, you guys? Josh back with another video here for you. Hope you guys are having a great day so far. And today I want to quickly break down how I trade these parabolic reversals, right? So these stocks that are spiking hard or, tanking pretty heavily. And, I want to kind of talk about how I trade them and what I'm looking for as far as indicators and what gives me conviction to take a position on these stocks. So really quickly here, before we get started, I want to just say that I'm not a guru, nor do I want to push that persona onto you guys. I'm just an average guy. I trade full time, but I don't consider myself an expert by any means. All this information has been derived through my experiences, my studying, etc. So it's somewhat subjective, as are most things in the stock market. And, if this information is helpful to you, go ahead and take it and use it at your leisure. But I just want to get that information out of the way first. So without further ado, let's go ahead and jump right in. On the screen here, as you can see, this is an example that I've kind of made for you guys of a bottom reversal. Now, for me personally, there's top reversals, bottom reversals, but I find that the bottom reversals are a little bit easier to spot and a lot more consistent for my style of trading, right? When it comes to top reversals, a lot of times some stocks aren't shortable, and if they're not shortable, then you have to, try to locate shorts and go through the whole shebang. So I'm not really a fan of that. I like to just be able to see a stock that's tanking, anticipate the reversal based on a couple indicators that we'll break down here, and then take my position, right? So for this tutorial's sake, we're going to focus on bottom reversals. However, a lot of this information in this video can be applied to, top reversals as well. Now, in this picture that I've provided for you that I've kind of created using Microsoft Paint, as you see, this stock is kind of downtrending, right? It comes down, it hits this kind of base support here, which could kind of be seen as the 530 area. After that, it kind of bounces up, comes back down, and once it breaks that base support that you see at the top left there, we kind of have this massive drop down to that $5 area. And a couple things that I'm looking for when it comes to a reversal, especially a bottom reversal, is an increase in price action relative to prior price action. So when this stock was above that base support that we see at the top left, it had some price action as far as these candles, it had some range or whatever. But once it breaks that support, the range on the candles is increased, right? So those two candles right under that support level, the range on those candles is significantly higher than the range on the previous candle. So that's kind of what I'm looking for, right? A stock that kind of gradually downtrends, and then all of a sudden it kind of falls off the face of the map, and you get this massive increase in price action relative to prior price action that it's been trading. Coupled with that increase in price action, I'm also looking for an increase in volume relative to prior volume. So these two things combined is a great indicator that a reversal potentially could be coming right afterwards, right? So we know that stocks go up and down in kind of waves, right? It'll go up, then it'll go down, and it'll have these kind of sessions of candles where it'll have, 3 or 4 or 5 candles to the downside, then it'll have 3 or 4 or 5 candles to the upside. So when a stock is downtrending gradually, and then it has, 2 or 3 massive candles, and you have that increase in price action and increase in volume that's relative to prior volume and price action, we know that, hey, the stock just had 5 candles of downside. We can anticipate a couple green candles. And not only that, but this stock is exhibiting a perfect bottom reversal setup here because we're having that increase in price action and volume. So what I want to do is I want to look for those whole and half dollar numbers as my area to kind of anticipate a reversal at. Now, it's not always going to be whole and half dollar numbers. You have to kind of adjust that based on the situation. Maybe there's massive support at, $5.10 or $5.20. If that's the case, you need to kind of adjust your strategy based on the intraday, daily chart support, and the levels that you can find based off prior price action. But in a lot of situations, you're not going to have these whole and half, you're not going to have these defined areas that you can use as support, right? So you're going to have to go off of these psychological support and resistance areas, which are usually the whole and half dollar numbers, right? So in this case, the whole dollar number of $5 is going to be our support. And in some situations, it might blow through $5. It might blow through $5 and it might drop to $4.50. So as the stock is tanking, you don't want to start buying as the stock is going down, right? You don't want to catch a falling knife. Instead, you want to wait for the stock to confirm that it's changing trend before you take your entry. So as we see here on this example, stock's falling. We catch a base here at $5. We dip below it for a second, which happens often, right? It happens all the time. A stock will come down to a level. It'll break that level just briefly. It'll maybe drop, 5-10 cents down to 4.90 or 4.95. And then it'll quickly regain that support level, right? That $5 area. And I mentioned this a lot in other videos where we kind of talk about this over and under method where a stock will come under a level, then over it, then under, then over, and then it'll eventually base out or peak out at that area, and it'll kind of tell you which way it wants to go, right? So if it starts to base out at $5 after coming back over it, then we know that the potential for it to go higher is a lot more likely. However, if it peaks out right below that $5 area and it starts to fade, then we know that the likelihood of it continuing on a downtrend is higher, right? So in this case, we came below $5, came right above it, came back down, and we started to base out at $5, and then we get this bounce and this recovery. So this is kind of what a reversal looks like in latent terms. And, I'm going to show you some charts on Thinkorswim here now, and we can kind of break down how it looks in different situations. So right now we're looking at FRTA, and I actually traded this stock today. Now, keep in mind, this stock is somewhat thinly traded, so I wasn't taking massive size on it. If we jump out to the daily chart real quick, as you can see, stock only had about 1 million shares traded intraday, and since it's a $5 stock, that is very unimpressive, right? So keeping that in mind, I noticed this pattern of this stock just tanking like this, and it really interested me, right? I was really intrigued by it because, like we saw on the example that I showed you earlier, we had these you had these, gradual red candles. It just kept going. No real green candles coming in here. It just kept falling. And then all of a sudden, we had this massive drop, and these candles started to really increase and pick up in speed here. And all of a sudden, we had 20 cents of range on any given candle. And that's what I'm looking for. However, the problem is that, if we look back here with these first two candles, yeah, we have the increase in price action. Yeah, we have the increase in volume, as you can see, but there's one issue, right? And let me kind of circle these for you. So we have indicator 1, which is perfect, increase in volume or increase in price action relative to prior price action. We have indicator 2, increase in volume relative to prior volume. But the other indicator that we're looking for are whole and half dollar numbers. Now, if I draw a line here, we have the whole dollar number of 5, boom. And then we have the half dollar number of 450, boom. So in this situation, we blew through $5. We snapped below 5 and we started to fade. Now, I wouldn't be getting in here once I see this green candle because, 480s, I don't really see any 480 support on the chart here. I mean, even if I go to the daily chart or the daily chart here, boom. I can't really identify 480s as support, right? I mean, maybe here way back when, but that's not enough for me to have the conviction to buy here, right? I mean, this is so long ago that I just don't know if that's going to hold. And with the situation coming in here, you just don't know how far down this thing can go. So I would rather, stake my money on a whole or half dollar number rather than a support level from, God knows when, a year ago. So in that case, the stock keeps fading. And so I actually traded this intraday. I took really small size. I wasn't really seeing anything else. For some reason, I just wasn't feeling it. So I took really small size, made a little bit of money on it, nothing too crazy. But when I saw it fading here, I wasn't getting in yet. I was, let me just see where it goes. If we can get down to 450, maybe I'll get it for a reversal if we can see some volume. But for now, I'm just going to sit on it. I'm not going to do anything. So as it faded, I saw it approach that 450 level, and then I saw this nice snap here. And I kind of saw some volume come in, right? You see this increase in volume. It starts to pick up here. And I was really interested at that point. I was like, okay, well, the volume's picking up. We started to reverse. So I got in. My entry was at 455 right here. And since it was a thinly traded stock and there wasn't much volume, I scalped it, right? Which I usually don't do. But in this situation, I was like, you know what? I don't know if this stock is going to keep going down. I mean, the increase in volume is nice, but I usually don't trade thinly traded stocks to begin with. So we came up to 455. I got in as we recovered that 450 area. We perked up to 465. I had a sell in at 465 for my position, and it got filled. So looking back at it in hindsight, obviously I should have held, right? And, even then, even when it broke 465, there was no reason for me to sell. So that was something that I kind of thought about afterwards when I was doing, my reviews of my trades for the day, was that, even though I made money, I made 10 cents a share, which isn't terrible, there wasn't a reason for me to sell here. There was no reason. And I know we had this massive drop in this candle, but, sometimes you gotta be able to be patient, and especially when you're taking small size. You can be a little bit more patient with these. And I should have been more patient because in this case, I missed out on a lot of upside. I mean, I was really upset, but it happens. You learn from it, but whatever. So as you see here, We have the increase in price action relative to prior price action. We have the increase in volume relative to prior volume, but the problem is that we don't have that whole or half dollar number we can base our risk from. But we get that here whenever we approach that 450 area, and then we start to see that volume increase. Now, had this volume increased and this stock started to drop again even heavier, I would have been looking at $4. So I would have kept moving it down further and further. I don't care if this thing drops down to $1. I'll keep moving my my entry point lower and lower. And I don't get in until it starts to actually reverse. So once we approach that half dollar or whole dollar number, I'm not just going to buy it once it gets, at 450. I want to wait for it to actually catch a base, start to see some green candles, then I'll get in and I'll use, 5-10 cents worth of risk as my guide to determine whether or not I want to, sit in or get out or whatever the case might be. So in this situation, I got in at 455 using that 450s, low a day, 447 as my risk. And, I took a little scalp on it. So I was risking about 5 cents and I made 10 cents in gains. 2-to-1 risk reward, good trade. However, I needed to be a little bit more patient and I could have made way more money on that trade. So here's the first example of a bottom reversal. Now let's go ahead and check out another one. Next one we're going to check out is, let's go ahead and do NBEV. And for the sake of keeping this video kind of short, I'm going to quickly go through this one. This one's kind of further back on the daily chart from a couple days ago. So we'll go ahead and zoom back here. Boom, boom, boom. Okay. And it was right there. There were actually 2 days that it had a bottom reversal. So here's the first day we had the bottom reversal, right? And this looks almost exactly, if we go back to the picture that I showed you earlier, it looks almost identical to the picture that I showed you. And, once you start to understand how these patterns look, it's going to be pretty much a no-brainer once you see it start to happen. So as we see here, NBEV, we opened up at around 780, dipped down to 760, perked up to $8, and we held it as a top. Now, once that held as a top, that whole dollar number, that's when things started to get kind of nasty for the stock, right? If I draw a line through here, under, over, under, we peaked out, like I said earlier, right? So sometimes we'll come under, and over these key levels. And once we peak out or base out at these levels, you can kind of determine which way the stock's going to go. So we peaked out at $8 pre-market. Market opens, we drop down to a low of 760, catch a base at 760 for whatever reason, and then we perked back up to $8. And once we confirm that peak during market hours as $8 being the top, then we start to fade. And as you see, we have about 4 or 5 candles of downside. And then out of nowhere, once we snap this level here of the prior low, where we kind of, reversed from, we drop. And we drop hard. And we drop from around the 770 area all the way down to a low of 690 in 2 candles, right? So a couple of indicators that we've kind of talked about earlier that I'll just kind of circle here so you see it. Increase in price action relative to prior price action. Increase in volume relative to prior volume. So we have those 2 indicators that we're looking for. And for the third indicator, which is a whole dollar number or half dollar number, we get that right here at $7. Now, as you can see, we broke below $7, which is, like I said, a very common thing to happen whenever it comes to these patterns and these strategies. Stocks that are having a big parabolic move like this, it's very common for them to break through these whole or half dollar numbers just briefly. And in that case, it happened. We broke down about 10 cents from that whole number, and then we quickly regained that level. Now, had I been watching this stock, I probably would have gotten in at around 710 using that $7 area as my risk. If we perk up to 710 and we drop back down below 7, I'll get stopped out. But in that case, when I see this thing hold support here at $7 and reclaim this area of support after exhibiting high relative price action and high relative volume, I'm going to be interested in getting in, and I'm willing to risk that 10 cents at that point for potential 20, 30, 40 cents of upside. And in that case, had you gotten in at 710, you would have made 10, 20, 30, 40, 50, 60 cents of upside potentially, right? So it's a 6-to-1 risk reward. Tell me a better trade. Now, we're going to jump to another one here just to kind of wrap things up. Let's go ahead and take a look at, actually, let's go ahead and look at the second day, because this stock had 2 situations of it having these reversals. So this is the first day, yada, yada, yada. And then the second day, it happened again. Right? Now, this was a little bit different, obviously, because you don't have that massive candle move, but you have the volume and you have a couple candles that have higher price action. So in this situation, as you can see here, we have this kind of base here, boom, like usual. came down, came up, boom, boom, boom. And now we can't really hold above this level, right? So market opens, we drop down here, we catch a base here for whatever reason, perk up, come right below it, down to 650s, that $half number. Bounced off 650, put in a lower high here, came down, down, down. And then once we snap 650, now things start to pick up a little bit, right? The volume kind of starts to pick up here, as you can see, at the snap of 650. We come down, we try to bounce, failed, obviously. Come down, 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 and then we have this massive spike in volume. And this one looks a little bit different than the other ones, but it's the same thing no matter where you go. But as we know, the stock market isn't picture perfect, so things look different sometimes. So we come down, 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 and as we watch these whole and $half numbers, we see that $6 is right here, right? And as we come through 6, we have that massive increase in volume, slight increase in price action, enough to be significant, right? Nothing too crazy, nothing too obvious, but it's definitely noticeable that we have this increase in price action, right? Compared to prior price action on the way down here. Now, with this increase in volume and increase in price action, what else are we looking for? Whole number or $half number. And in that case, we have $6. Now, this thing dropping 10 cents like this is kind of tricky, right? Because after a 10-cent drop, you're like, man, that is brutal. You know, a 10-cent drop from that area. I mean, what if we peak out and we come back down? I mean, it just doesn't look pretty. It looks ugly, right? Just be honest. It looks really ugly when the stock breaks 6 and drops 10 cents, in this case, 15 cents, right? But like I said, it happens a lot. When a stock is having an extreme and you have massive volume like this, the stock tends to break that key level of support. It'll drop a couple cents. In this case, it dropped 15 cents. And then it quickly recovered. So in one candle, it went from 15 cents, it went from being down 15 cents to being right back at that support level. So keep that in mind. So even though it dropped 15 cents, in literally one candle, it was right back at that support level. And so once we rebound back to that support level and we start to see these other green candles come in, now I'm interested. Now I get in at 605. Now I get in at 610, right? Risking 10 cents, looking for 30 cents or looking for 20 cents. In this case, you wouldn't have gotten that 2-to-1 risk reward unless you got in at like 605, but it's nonetheless a good trade. If you can anticipate it and if you can be aware of it. Now, keep in mind that sometimes these trades don't always just recover all their gains, right? We looked at the first stock, which was FRTA, and that one retraced all of its gains, right? It came all the way back up. Let's actually take a look at it real quick, FRTA. You know, even though we had this massive move here, we came down and we basically recovered everything, right? We dropped from 540 down to 450, so we dropped 90 cents a share. And then we recovered about 55, 6, 7, 8, about 80 cents a share. So we dropped 90 cents a share. We recovered 80 cents a share on that move. And that's really, really good. But that doesn't happen that often. So if you go to something like EBIX, nope, that was the wrong one. NBEV, boom. If you go to something like NBEV, we will do this. It's a 10-day, 1 minute, fantastic. And let's zoom back one more time to right here. You go back to NBEV, you know, you're looking for this thing to recover all of its gains, right? You're looking for this thing to catch a base at 6, start to come back up, and next you know we're going to be at 640, 650s. Well, in this situation, you didn't get that. In this situation, you only perked up 20 cents from that support level. And then you started to fade, and we actually retested it a couple times. We started putting in lower highs, and we ended up breaking down below that level. And we panicked all the way down to about 560 towards the close. So had you not locked in profits once you got up here, you wouldn't have had that second opportunity, right? Because the highest that went after that pullback from the 627 area is the highest it got is 615. So you might have been in break even had you missed it and had you tried to chase this. So keep that in mind as well. And, you know, make sure you're locking in gains and make sure you're reading the chart here and keeping track of, you know, what's going on. So, you know, yeah, I lock in gains too early, but these kind of situations really suck because you turn a winner into a loser whenever you think this thing can go back up to 650. But in reality, it only has enough strength to go up to 628. So that's pretty much it. I'm going to show you EBIX really quick just to drive this point home. I know we're kind of drawing this out, but I really want you guys to see a couple charts to really get an idea of what this looks like on different levels. And in this situation, As we see here, EBIX is a little bit more of a pricey stock, but it's the same concept no matter where you go. I mean, you just got to really understand price action as a whole. And obviously, the price of a stock will make a difference. It'll make a big difference as far as how these look. But if you understand the concept, which is really important, understand the concept, and you can adjust that, and you can be very, very adaptable when it comes to trading a higher price stock versus a lower price stock. So in this case, EBIX opened up at around $71. Trend. Very thinly traded. So obviously, if you're going to trade this, take small size. But we have the same situation here. Boom, boom, boom. We drop. The problem is, it's $61 instead of 60. So we drop. We start to bounce here. And had you gotten in at $61 thinking, oh my God, $61 stock. We have this increase in volume here. We'll do it like this. We have this spike in volume here. And then we had, these 3 candles here, increase in price action. Let me get in. Well, you would have been dead wrong, right? You would have been dead wrong because you don't have that support level under you. Now, even though it's a $61 stock, imagine dividing the stock by 10. Instead of it being $61, imagine it being $6.10. Well, $6.10 isn't a whole or half dollar number, so there's no support there. And unless there's support on the daily chart or support intraday that you can identify based on prior price action, you want to focus on those whole and half dollar numbers. But in this case, we ended up dropping down to 60. Again, we had the increase in price action relative to prior price action. And then we also have this volume come in. Now, this volume isn't that significant. So again, I would be very cautious about trading this one because you don't have that massive spike in volume, but you have some decent price action. We actually have some candles here. Before, we had a couple candles with no price action on them, but now we actually have some pretty definitive candles and a little bit of volume spike here. But, for me, I would have skipped out on this because it just doesn't look that appealing, right? I mean, yeah, we have this increase in volume come in here compared to this prior volume, but it just doesn't look as good to me as a couple of the other charts. But nonetheless, it works out, right? $60 holds as support. And as we touch $60, we start to rebound. So all of a sudden we're at 61, then we're at 62, and then we're at 63, and then that was the top of the move there, basically. So $3 of upside. Had you got in maybe risking 30 cents, maybe risking 50 cents, you would have had that amazing 2-to-1 risk reward. You would have been paid dividends. So that's pretty much it. I don't want to hold you guys any longer. I think you guys get the idea. So feel free to, watch the market every day and see this pattern and this strategy play out. And over time, you'll kind of realize what I'm saying. Go ahead and watch this video a couple more times if you don't really get it yet. And I'm sure things will make sense. If you have any questions, let me know in the comments. Let me know what you guys think about this video. And I also want to say thanks for the 300 subs. I know it's not really much compared to other channels, but, I do this for fun and kind of a passion. I like putting content out to help other guys who are kind of starting out. And I think that it's really good to have exposure to a lot of content that you can pull ideas from. So, I appreciate the 300 subs. I'll probably do a giveaway at like 1,000 or something. And, but in the meantime, I just want to say thanks for that. And hopefully we can have other people join the YouTube channel and just, grow from there. And yeah, so anyways, thanks for watching, guys. Hope you guys enjoyed this video. Hope you guys learned a lot, and I will see you guys in the next video. Take care.